Coca-Cola is the wolvesofinvesting.com stock of the month pick for August 2020. That's what we're going to be talking about in today's video coming up. I am not a financial advisor. This video is for entertainment purposes only. Learn to invest like a wolf at your own risk. What's up, everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen and I'm the founder of Wolves of Investing. If you're new, my channel is primarily about investing in the stock market. If you want to learn how to achieve financial freedom through investing, be sure to click on that subscribe button and notification bell if you haven't yet. In today's video, we're going to be talking about Coca-Cola, the wolvesofinvesting.com stock of the month pick for August 2020. You can see all of our previous stock picks on wolvesofinvesting.com with their results. I'll leave a link in the video description. I know Coca-Cola is not the most exciting stock to talk about. It's not like a SPAC merger with the EV company or a Tesla or Apple stock split, but it's a company that I'm excited about because I think it's going to make a good return on investment over the next 5 to 10 years. Coca-Cola is a dividend aristocrat. It owns so many well-known brands, and it's one of Warren Buffett's largest holdings. Warren Buffett says that it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. And I think Coca-Cola is a wonderful company selling at a fair price. So in today's video, I'm gonna go over 5 reasons I picked Coca-Cola for the stock of the month. I'm gonna talk a little bit about the risks, and make sure you stay to the end of the video and I will share with you how I plan to invest in Coca-Cola. So without further ado, grab yourself a Coca-Cola and let's get right into it. The first reason I picked Coca-Cola for the stock of the month was its dividend growth. Coca-Cola's dividend yield is 3.47% at the time that I'm filming this video. Considering that most high-yield savings rates are paying less than 1% these days, Coca-Cola's dividend yield is awesome. But is its dividend safe? I think that it is, and here's why. First, Coca-Cola has increased its dividend 58 years in a row through some of the most tumultuous times in history. It's a dividend aristocrat, it is a dividend king. This period of COVID-19 lockdowns could possibly be the worst. But a 58-year history and culture of increasing the dividend is something that any company, especially Coca-Cola, will want to protect. And second, in the last earnings conference call, John Murphy, Coca-Cola's chief financial officer, stated that one of its priorities was to continue to grow the dividend. So unless the worst case scenario unfolds, I expect Coca-Cola to continue growing its dividend. The second reason I picked Coca-Cola was for its company leadership. Coca-Cola is led by James Quincey, CEO since 2017 and chairman of the board since 2019. I believe that he is the key to leading Coca-Cola back to growth. After several years of decreasing revenues, Coca-Cola finally grew revenues in 2019. I attribute this growth to the growth mindset of James Quincey. 2020 will clearly be a tough year for Coca-Cola, but with Quincey at the helm, Coca-Cola should get through it, and I believe they're going to come out stronger on the other side. The third reason I picked Coca-Cola was for its focus on growth. In the most recent earnings conference call, the company laid out its growth strategy. Coca-Cola will stop efforts on their failing brands. For example, they discontinued their Odwalla juice business in July. Instead, KO will make much bigger bets and investments into its winning brands. It will also continue to test several product offerings and scale them up if it looks like they're gonna be winners. Coca-Cola also acquired Costa Coffee in 2019, showing that they are willing to take calculated risks to grow their business. The fourth reason I chose Coca-Cola was for its new product offerings. There are two new products that I am very excited about. The first is Topo Chico Hard Seltzer. Hard Seltzer is very popular with millennials. The second product is Coca-Cola Plus Coffee. As a coffee drinker, I am really excited that Coca-Cola is getting into this space. If these new products gain traction, I think that they could make a decent contribution to Coca-Cola's top and bottom line. And the fifth reason I picked Coca-Cola was for its excellent credit rating. According to Markets Insider, the Moody's rating for Coca-Cola was A1 as of April 29th, 2020. And its Moody's Analytics risk score was 1, the lowest risk on a scale of 1 to 10. This is a testament to Coca-Cola's strong balance sheet. This will allow Coca-Cola to maneuver through these uncertain times. What about the risks? The biggest risk to Coca-Cola that I see is the lockdowns caused by COVID-19. On-premise sales contribute to approximately 40% of Coca-Cola's product sales. As great a company that Coca-Cola is, no company can take that kind of sustained hit to their business without some major impacts. But in the latest earnings conference call, the company stated that the worst was probably behind them. So that is promising. Another thing that's promising is that some places around the world are already starting to reopen. Check out this video from Twitter. This is a pool party in Wuhan, China, where the disease started. Thousands of people are in attendance. There is no social distancing. There are no masks. Wuhan hasn't seen a single case of COVID-19 since mid-May. I don't want to make light of the situation or anything, but to me, I think it's just a matter of time before the rest of the world opens up safely. Alright, so here's my game plan for Coca-Cola. I'm investing in Coca-Cola in my Roth IRA. Coca-Cola's dividends are sweet, but getting those dividends tax-free forever in my Roth IRA is even sweeter. In my Roth IRA, I have an 8% portfolio target for Coca-Cola. From a price perspective, I think Coca-Cola shares remain undervalued under $50. As long as the shares remain under $50, I feel very comfortable buying Coca-Cola up to my 8% portfolio target. If shares go above 50, I might still dollar cost average into the stock, but I'm not going to be as excited about that price point. So tell me what you think about Coca-Cola. Drop me a line in the comments. Be sure to leave a like on this video before leaving. Thanks for watching, and I'll see you next time.